Good morning and welcome. Patriot Radio News Hour, Joe and Jason on this Tuesday. I hope it finds you well out there. Our toll-free number, 800-951-0592, the physical delivery of wealth insurance. You know what? When you think about it, maybe more than ever, probably going back to the financial crisis. And before that, the ending of the tech bubble. And before that, the crash of 87, right? Having wealth insurance is something that a lot of people, you know what, when they talk about it, everyone, you know, hey, I got my car insurance, I got my health insurance, got my life insurance. But when it comes to wealth, so many people, all their eggs are all in one basket, the debt basket that is Wall Street, the bond markets, you name it, what I'll call the pinstripe bandit-controlled debt money system. You better get your insurance in place. Today, Stanley Drunken Miller comes out and just blasts. Matter of fact, not only did he blast Janet Yellen, called for her removal as Treasury Secretary, the biggest blunder in Fed history. I mean, think about it, go back to Alexander Hamilton, right, when they first tried to get a Federal Reserve Bank. It really, and you know what? Wait till I tell you about it, because you'll be like, she should be fired, absolutely. Matter of fact, it's a big reason why we've got a problem in our debt markets as we speak. AllAmericanGold.com is the website. And Jason, we've got a Japanese 10-year note now, 0.97, right? So basically, okay, we're at 1%. That doesn't help the yen. The yen getting weaker by the minute, 151 and change. I would imagine Japan, before the yen could even think about strengthening, I don't know, 2%, 3%, right? And, of course, Japan, it's bad here because we talk about how everybody has this debt that yielded next to nothing, right? A quarter of a percent, half of a percent, maybe 1%. And of course now yields it at 5%, right? They're losing money hand over fist. Heck, Japan, for a lot of this time, the yields were negative. So Jason, we've got this problem really repeating itself all over the globe, and it's something where we just don't know what is going to be that final shoe that causes chaos in the market.
It also sounds like the next Toyota I buy is going to be a lot more expensive. That's what it sounds like, because 1%, you go to 2%, you're doubling. So I don't think this is going to help the inflation, Joe.
It really is a quandary. Today, the Fed meeting has started. We're going to get the announcement tomorrow. By all accounts, it will the pause, if you will still be in effect, and we'll see about what the statement is. The Treasury yesterday said, hey, over the next 6 months, they're going to issue just under $1.6 trillion more in debt. Now, that does not include the 100 and some odd billion they want for war. Yesterday, the Biden administration, we need another $56 billion in emergency spending for faster internet, disaster relief, and all kinds of other pet projects. That's not included. Think about the second quarter. They issued, well, technically it would have been the fourth quarter of fiscal year 2023. The Treasury issued $1.01 trillion. Yesterday, they said, okay, then 6 months after that. So October through March, we're going to issue $1.592 trillion. We're around at $1.6 trillion in debt. That'd be $2.6 trillion in 9 months. And here's the problem. We know it's going to be plus. right? Because we're going to get war money and other money, and heaven forbid the economy slows down. Jason, we are well on our way to getting to, numbers that they didn't think possible, 3 trillion, 4 trillion. But here's the thing. That wasn't the big announcement. The big announcement's going to come tomorrow. And it's not about the Fed. No, the Treasury announcement, what the market wants to know. How are you going to sell it? In other words, are they going to be 2-year notes, 5-year notes, 7-year notes, 10-year notes, 20-year notes, 30-year notes? Because they have a huge problem right now, which is nobody really wants to buy and lock in to long-term debt. But this brings up Stan Drunkenmiller's comments today. He goes, think about this. What is Janet Yellen doing? Everybody and their mother, when rates were at zero and the Fed, remember, for a whole year, it's transitory. Everybody that could lock in a mortgage did it. I'm refining to a lower rate. Everybody, every business that could do it extended their debt terms. Hey, let's refinance. I don't have to refinance for a couple of years. Let me refinance now. Because we know the Fed's going to be jacking up the rates. What did Janet Yellen do with our debt that has Stan Drunkenmiller saying she needs to be out of her job? I'm going to tell you right now, it's a big problem. That's all coming up next. Patriot Radio News Hour. Joe and Jason, come back and take it. 800-951-0592. Joe and Jason here on a Tuesday. A quick look in here at the markets. We had a relief rally yesterday across Wall Street. Today, very quiet, pretty quiet everywhere. Everyone's waiting tomorrow. It's going to be a big day with the Fed. Of course, nobody's expecting a rate hike. We'll see about the talk. Is it going to be tough talk? But all eyes may be on the Treasury for all the wrong reasons. Right now, the Dow, the S&P, the NASDAQ, they're all within 10 points of up or down. The Dow is down, the NASDAQ is down, the S&P is up, but none of them are down or up a lot. Gold's flat. Gold's been up most of the day, but just flat here right now. Silver's down a little bit, down 14 cents. The big news in the 10-year note market, the Japanese 10-year note, 0.96, as the Japanese central bank said, hey, we'll let it get to 1%. They were hoping for that to give the yen some support. It didn't. The yen now 151.28, and like I said, they're going to have to go a lot higher than 1 before the yen is going to find any semblance of a bottom here. And if you're like me, if you're like a lot of people and saying, you know what, I just don't trust this market, right? I get it. I see where we're going, right? I mean, think about it. The Dow, 32,900. I know it's been higher, right? It's been lower, but it's been sitting right around 33,000 for like the last 3 years. You're getting your butt kicked, right? The S&P, the NASDAQ, it's even worse. You're just getting your butt kicked here, and guess what? We know. You know it. You know. Hey, I mean, is there one more little rally left? Maybe. But it sure looks like we're waiting for the next bursting of a bubble, right? That's what everybody's anticipating. This is why I said there's some great alternatives out there. There's not very many. You got to have smart people in your corner. That's why I keep telling you, call my son, please. At least he can protect your 401k, your IRA. Check out why refi. Now, there's some requirements there. First, you got to have $50,000, right? You got to have $50,000 you can work with. Here's the great thing, though. You can use an existing IRA. So if you got an IRA, I don't know, maybe you got $500,000 in there, maybe you got $1 million in there, maybe you're going to take 10, 15, 20% and give it to Y refi. Because you get a fixed rate of return. What does that mean? That means it doesn't change every single month. It's the same. Doesn't matter. Wall Street has a good day. Wall Street has a bad day. Janet Yellen screws up again. Jay Powell screws up again. It doesn't matter. Up to 10.25% return. And that's if you say, hey, you know what, why refi? Let's go 5 years. Maybe you don't want to go 5 years. 5 years, I don't know if I want to go that long. Look, if you go 1 year, you get 6.25. And that's sounding pretty good right now when you look at what your 401k and IRAs have been doing. Check them out. InvestYRefi.com. That's the word invest. The letter Y, REFY.com. Or just make it easy. Just call them. 888-Y-REFI-24. But Jason, I will tell you, I don't think I've ever seen this before, where you have somebody as respected as Stanley Drunken Miller is. This guy is, when you consider the Titans, he's on the TV a lot, right? He's on the cheerleading stations. Of course, he's not the big cheerleader. He's usually the guy they bring on to tell you, hey, watch out here. And the day of a Fed meeting, and we're saying, well, Jay Powell, it's important, but not as important as how the Treasury is going to say, how are we going to sell all this debt? I've never heard that before. And they're talking about the reality. By the way, this is CNBC, your favorite cheerleading channel. The reality is there's a supply-demand mismatch in the market. What are they talking about, mismatch? No one wants to buy long-dated treasuries. That's what they're talking about. Nobody. And this is where Stanley Drunken Miller started calling for Janet Yellen's job. That is what is leading to this move in bond yields. Now, who's warned you about that? Who told you? Go back to our shows in July. Go back to them even in June. I was telling you this was going to happen. I was telling you, hey, bond yields are going up whether the Fed raises rates or not, because they did a little trick. It was a stupid trick to boot. And they're saying that some have said that the issuance is almost more important than what the Fed says or does. I actually think both in combination are really, really important here. So how are they going to sell $776 billion this quarter, right? $816 billion next quarter, plus any other spending Congress does. And here's where the rub comes in. So think about what I said at the beginning of the show. If all these businesses were refinancing their debt, every consumer that owned a home refinanced or bought a home at the super low rate or refinanced to one. Every business that was allowed, whether or not their term was up. Hey, I'm going to refinance now, but you got 3 more years. I don't care. I want to go longer. I want to lock in these low rates for as long as possible. Because what are we talking about with business right now? Any business that wasn't able to refinance. They go to refinance today, they're screwed. Right? Because they have debt that they were making interest-only payments on at 2 or 3%. Now they've got to refinance and assuming, let's just assume they can still get value, whatever their collateral was, that it didn't go down. Now that same debt, the bank's like, hey, we need 8%. And they're like, what? Well, gosh, if we do that, we're going to be bankrupt, right? That the extra interest payments that makes us insolvent, right? The only reason why we were solvent is because of the low rate. What was our federal government? What was Janet Yellen doing at the Treasury? I'll tell you what she was doing. She was selling short-term debt. 3-month, 6-month, 1 year, 2 year. Matter of fact, she sold so much of it that I started warning you in June and July. Wait till August comes. We got a problem. Too much of this debt's maturing. And now they're going to be forced to sell all this long-term debt, and rates are going to skyrocket. I told you plain as day. And today, Stan Druckenmiller took a big shot at her and said that he flat out didn't understand what in the world Janet Yellen could have possibly been thinking. I told you this woman was dangerous. Heck, I told you before she became Fed president. It was her and Ben Bernanke that came up with that 2% bull crap. Guess who was involved in quantitative easing? Oh, yeah, that was her. You betcha. Right? Who was it that said, we're going to start selling our balance sheet the first time? Oh, that's right. That was her, too. Remember when Bank of America had to send a note to the Fed, what the hell you doing? Right? You guys remember, probably, some of you do. But Stan Druckenmiller said, I literally think you have to go back to Alexander Hamilton. It is the biggest blunder in the history of the Treasury. I have no idea why she's not called out on this. She has no right to still be in the job. Amen to that. Amen to that. But guess what? He's the only one saying it. And now, think about what they're talking about now. Well, gosh, how are you going to sell it, Janet? How big are these auctions for debt that nobody wants? Think about it. Who in their right mind right now wants to lock in 10, 20, or 30 years at 5% plus? Because they're all like, hey, man, the bubble's going to burst here any day now. Right? Right? It's going to burst any day now. And you know Wall Street, they always, and the Fed's probably going to cut rates. Right? That's something right now where, Jason, this is going to be an epic problem. And unfortunately, I hate to tell you this, it's going to make rates go even higher now. All on her. This is all on the Treasury. They should have been selling, instead of selling 2-year notes and 6-month notes, they should have been selling 10-year, 20-year, 30-year, as much as they could, because that way you're locked in. Think about what our government's going to be stuck with now. We're going to be locked in to paying 5+% on interest on the debt for the next 10, 20, 30 years. And it's going to overwhelm. The interest payments, Jason, are getting ready to skyrocket. Because right now, listen, we're still only paying a little over 2% because we still have so much cheap stuff out there. Every year, that number gets worse and worse and worse. To, you know what, in 20 years, don't be shocked if more than 10% of our GDP is being interest payments on the debt, Jason.
Right, and for people that are listening, treasuries are somewhat unpopular, but they can always sell. Joe talks about these auctions and how stressful it is. Nobody really wants it, but they can just flip the switch. So what Janet Yellen is basically going to do is she can sprinkle out, a higher interest rate. They those auctions will push those interest rates higher. We talk about why refi 10.25%. If the Treasury is offering 10% today, they'd be able to sell their auctions. They'd be able to sell those Treasury like crazy because that's a rate that people are going to jump all over. But that also means massive problems for the economy. So yeah, Janet Yellen's Joe. I watched another guy talk about the same thing yesterday. It was talking about what Janet Yellen's going to say and do might be more important this week than anything else, any other economic numbers this week. And this is a busy week for economic indicators. And Treasuries are going to have to go higher. Treasury interest rates will have to go higher. That's the only way they can sell this stuff. And that's why I said next year, Joe, 10 to 12% interest rates on mortgages. And it's very possible that I could be shooting too low if things go really bad, Joe. So, yeah, you guys got to watch this stuff, and this is why we sell gold and silver. And I hate to say it, but if you're in the market to buy a home and you're waiting, it might just be a better time to do it now, because these rates may not come down for a long time. 5% might be our new floor, Joe.
I'm not very confident that we're going to see rates come down. Again, I've said it the last several days. We got the thing. Now, right now, Israel's got a blackout. We're not really seeing what's happening, I think, on purpose. But people should be flooding the Treasury market right now. Flooding it. Right? Flight to safety. It's not happening. I mean, we're seeing it in gold. We're seeing gold go higher. Right? Even Bitcoin. Right? Think about this. I'd rather, now it's probably the same people in the Bitcoin, but I'd rather buy Bitcoin than a US Treasury. That's what's happening right now. And this is why Stan Druckenmiller is saying, man, Janet, why is this woman in her job? This may be the dumbest thing the Treasury has ever done. When we get back, I'm going to help you move some of that into gold. 800-951-0592. 800-951-0592. Patriot Radio News Hour. Joe and Jason here on this Tuesday. Gold right now, 2006. That is your December gold contract. Got another great special for you. And you know what? The nice part is some good quantity too here on $5 Liberties. We ran these, I think, a week or so ago. They were a little cheaper than, obviously, gold's gone higher. It is what it is. But we've got 75 $5 Liberties. These are the older ones, 1866 to 1907. A quarter ounce of gold. 1 through 9 at $570. 10 or more at $565 at 800-951-0592. And think about what we've had people come out and say. Muhammad El-Arian, another one of these stock channel guys. Man, Jay Powell blew it, right? Blew it. Why would we even think that he would be able to fix it? The Fed has no strategy. Oh, we're going to look at the data. Look at the data. Look what that's gotten us. Right? They kept looking at the data in 2020, didn't do anything, did they? Now Stan Druckenmiller comes out and says, why in God's green earth does Janet Yellen still have a job, and why is nobody saying, what the heck was this woman doing? And guys, this is the problem, because these guys, they're billionaires. They can say it out loud. But what do you think the rest of the world thinks? You don't think the Chinese are like, what the heck are they doing? Even the Japanese, who, let's face it, they're just as bad. Think about what the world really has been doing. And it's really simple. They've been moving away from the dollar. Now, we could say militarily that the U.S. has lost some power, right? I mean, think about Russia and Ukraine, now the Middle East, right? There's these countries that used to, hey, we're going to go, we're going to talk real tough, but we're not actually going to do anything. Right, are now doing it. And look at China's talked to, every week they talk about aircraft and naval ships intercepting our aircraft and naval ships, buzzing the Tower of Taiwan, right? Look, that all matters. Because, as Jason says it all the time, right, these wars are about economics. And what the world is saying right now is, hey, you know what? The U.S. has made a bunch of stupid mistakes. A bunch of them. Interest rates at 0 for 15 years. What could possibly go wrong? Oh, right? What did they think? It was going to stay 0 forever? And while they did it, think about this. Think about when they talk about how dumb they are. By the way, at the same time that we're at the 0, we're going to force the banks to buy it all. They have to buy it.
Yep.
I mean, think about this. Go back 5 years, 10 years. Would you have bought a 2-year note at 0.25%? Would you have bought a 10-year note at 0.7? Yes, I'd like 0.7% interest on my money for 10 years. Hell no. But guess what they did? Because they're brilliant. This is what I got to say. These guys aren't smart. They're not smart. They're puppets. They said, hey, banks, you got to buy all this crap. And now look. By the way, reverse repos, we've been talking about it, now down below $1 trillion. Well, they're saying around $1 trillion. Okay. Sure. Sure. Right, Jason? These guys, listen, you have no idea. They are robbing you. And guess what? They're setting the stage for the big plunder. And that's the sad part. Either you get prepared or you get plundered, Jason.
Yeah, I was looking, there's always different ways to look at numbers. I was looking at this number that was thrown at me. I was looking at the national debt, which is approaching $33.7 trillion. Since about midway through 2020, so a little over 3 years ago, we've put on $10.4 trillion, Joe. $10.4 trillion since halfway through 2020. Was it George Bush Jr. took it to $5 trillion under? It's not his fault, but under his two terms, he took it from 5 to 10, and then Obama took it from 10 to 20. So Trump, if he would have had 2 terms, or let's just say the Trump Biden, we got another whole year, right, Joe? We got another year plus. We got 2 Januaries before Biden's term is up. I think $40 trillion is well within reach, doubling over every 2 presidential terms. I mean, does that mean whoever gets elected next, if he goes 2 terms, it's going to take it to 80 in 8 years? And that's what it looks like is happening, Joe. $10.4 trillion since COVID. That's a lot of money, man. That's a lot of money.
Interest on the debt is going to kill. Right? Look at Japan. By all accounts, the yen should be the strongest it's been in decades. And it's the weakest. I mean, I know that we laugh kind of, 10-year note at 1%, that's huge for Japan. And it's not helping. This is where we're headed. Higher rates, but the dollar doesn't get stronger. Instead, how many times have we said it lately? Isn't it weird? Gold goes up when the rates go up. That's not a good sign. And I think a lot of people tomorrow, I think we're going to get, we could set ourselves up. I hope everybody out there listen. I know some of you, remember what was it, a month ago, I begged you, please buy during this ridiculous, stupid pullback, the paper pullback. And then I begged you, a week ago, please buy before Israel starts the ground war, right? Because I know what's going to happen. I'm telling you today, buy today. Because we could be in a situation where not only does Jay Powell not raise rates, but then the Treasury issuance puts more stress on these debt markets. And we could, Jason, we could easily be talking about, right, gold once again, right, all-time record high gold prices. It's coming. Right? It's just a matter of when, but I think a lot of people are now starting to read the tea leaves here. This is something where we are going to see a very, very constructive move in gold. $5 libs, 1 through 9 at 570, 10 or more, 565. Jason and I, we're coming right back. 800-951-0592. Joe and Jason here on this Tuesday. You can't sit on your hands. You just can't. So many things are happening in this market. It is so fragile. And again, go back to the financial crisis. Think about what happened. Think about the signs. Right? Housing was a disaster. We knew that. Housing's a disaster today. A little different disaster, but a disaster still, right? No one can afford a house. Heck, most people can't even afford a car. I mean, those are facts. We've had huge mistakes by the Fed and the Treasury. It almost defies logic that they could have made this big of mistakes. Right? Oh, it's transitory inflation. It wasn't because we printed, what was it, $20 trillion or whatever, some outrageous amount of money. Oh, no, it wasn't that. No. It's just, transitory. Supply chain issues. Yeah, that's it. Janet Yellen. Every business person, heck, anybody with an IQ higher than room temperature was refinancing their debt when the rates were low, except the United States government. Right? They were the only ones in their infinite wisdom that said, we don't want to lock in for super low rates for 10, 20, 30 years. Why would we want to do that? Morons. And now we're all going to pay for it. And I hope you're getting ready. I hope you're not sitting on your hands. This is going to get ugly. Not because I want it to, or, Joe just sells gold, so he just wants to scare me. No, these are facts. This is reality. How about Charles Schwab? Well, they got problems. Their stock's down 40% this year. They're a bank now. They got deposit problems. And now they've started swinging the axe, and listen to what they said about it. Oh yes, we want to streamline our business, and we want to do it ahead of next year. Why would that be important? Well, according to Charles Schwab, they're being real nice here. They think next year, Jason, it's going to be full of turbulence in the financial markets. I wonder what they mean by turbulence. Oh, what could it possibly be? Right? Do you think Charles Schwab is like, yeah, we're laying people off now because if you thought equities were bad the last 2 years, wait till next year. I mean, I'm reading between the lines here, Jason. They didn't write it that way, but why do I believe in the boardroom? That's exactly what they were saying.
When is the last time the markets had a good year? You know what I mean, Joe? I mean, I know that there's certain companies, hey, I bought this stock and it went up, and I made a lot of money, or I bought Bitcoin and it skyrocketed. I'm not talking about that. As the economy as a whole, isn't it always just a bad year or a really bad year? Isn't that the only way to really look at it? I mean, slowly, the average person.
They've had some really good years.
I don't know. I just think the average citizen is being
lying about how we were getting it, right? Making valuations, right? If you went back just 10 years ago, forget about the old valuations, 8-1. Forget about that. I'm not even talking about that. But if you just went back to 16-1, which was the new normal before the financial crisis, Jason would be right. We haven't had any good years. The stock market would probably be, 20,000, maybe 18,000, right? The Dow, right? The S&P, maybe 2,000, 2,200. See, and you're living on this illusion, right? Think about how can it be that no one can afford a house in America? How can that be?
Well,
but that's what it is. right? What has to happen? Crashes have to happen. Right? Charles Schwab, you know the last time I did not know this. The last time Charles Schwab had to swing the axe like this? The dot-com bubble. Interesting. Right? Charles Schwab is getting ready. Right? They're getting ready. Now, I'll be honest, during the '08 crash, they really didn't do anything. Right? They stayed kind of right where they were at. Right? They didn't hire, they didn't fire. Dot-com bubble, yeah, got to get rid of people. And I think it's happening all over again. And it's just going to be different this time. Get ready for really high rates, really high inflation, and nobody being able to afford anything. It's one of those things, we've got to accept. I think stagflation is going to be here, not even hyperinflation, stagflation, which is, hey, guess what? You're getting poorer by the minute, and prices still are going up, and you can afford less and less and less. I mean, look at what these strikers got. It was incredible. It's incredible what they got, and guess what? I hate to say it. By the time this 5-year contract is up, they'll feel no better off. That's just what's going to happen, Jason.
Yeah, I don't think they make it 5 years, Joe. Ridiculous taxes and 2% annual inflation, I think, has made every year a bad year for the average guy. Now we're just higher inflation, and it's much worse, Joe.
Another billionaire was talking today. Oh, a lot of billionaires talking today. And guess what? He was talking about taxes. And you're not gonna like what he had to say. Get that gold put away. $5 Liberties, 1 through 9, $5.70. 10 or more, $5.65. Final segment coming up. 800-951-0592. Final segment on this Tuesday. And again, tomorrow's going to be a very, very interesting day. I think it's going to be a good day for gold. We'll see what the price does, but I think, good day by this. I think we're going to get confirmation, no rate hike. People are going to start the talk of the Fed is done hiking is going to pick up steam. Then I think we're going to see the Treasury just announce again, every auction size, $2, $3, $4 billion more. I mean, it just doesn't stop. And then, oh, by the way, guess what? In the first quarter, they got to do it again. If it was me, I would be adding to my portfolio today $5 Liberties, 1 through 9 at $5.70, 10 or more at $565 at 800-951-0592, or you can just order online at allamericangold.com if you're new. I know so many new people. It is, I guess it could be scary. It's so simple. Just call the girls, tell them you want the special. We'll ask you one really hard question. How many would you like? You can pay for it with a check, a bank wire, credit cards. We charge 2%. If you want to pick up and pay cash, you can do that. We got offices in Arizona and Colorado. Otherwise, we ship FedEx. I mean, how much simpler can it be? And, oh, by the way, we don't bother you. We don't call you. We don't solicit you. We don't text you. We don't email you. 800-951-0592. So let's see. Stan Drunkenmiller said Janet Yellen should be fired. Biggest mistake in the history of the Treasury. Mohammed El-Arian. The Federal Reserve has no plan, no strategic plan. Jeff Gunriots, right? Same thing, right? The Fed does not know what they do. Paul Tudor Jones, right? By the way, all four of these guys have been telling you buy gold. Every one of them. Guess what he said today about taxes? Oh, yeah. We can't afford this stuff. No amount of spending cuts or fiscal discipline is going to fix this mess. By the way, know what he said taxes should be? Because right now the USQ, we got about an 18% tax rate. He goes, well, England, Europe, they're at 28%. That's where we need to be. Think about how much taxes would need to go up to get there. Now, there's only two places to get taxes from, right? You tax Wall Street and you tax individuals. And by the way, is it coincidence? The head of the IRS today, I think it was yesterday, admitted, kinda, sorta, okay, yeah, maybe people making under $400,000 are going to get a visit from the IRS and all our new agents. Don't worry, everything's fine. 800-951-0592. Jason, it's just incredible I've never seen people so respected absolutely coming out and saying, man, we've got a problem, we've been led astray, we've got the wrong people in charge.
Yeah, Joe, and it's where were these people a few years ago? You could see it. You could see it a few years ago. It was happening then too. But I guess they just didn't want to be right until maybe until their backsides were covered. I get the feeling a lot of these guys are all covered now.
Right. Hey, I don't want to be right, but have it take 2 years, 3 years to be right. I'd rather say it right before, right, and then be right away. Thanks for Radio News Hour. You want to be right? Call the number. Jason and I are coming right back.